The stock market sector rotation appears to be underway, and there's some critical things you want to pay attention to for the month of June. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today's SPY was down 0.35% with another rejection from that critical resistance up there just below 430, and I'm still viewing SPY as a trading range between 420 and 430. With the blue skies breakout by the bulls if we start to break 430. However, as I always say with price action, do not assume we're going to break 430, so there's no reason to be bullish until we break through that. Once we break through 430, then we can get more bullish for the trip into the 440s, but we need the price action confirmation in the breakout. So as I just talked about last night, the theme of June is likely going to be sector rotation, and we saw a lot of that happening today. And let's jump over very quickly to the triple Qs, which was down 1.7% and came all the way back down to the support that we need to hold for the bulls. Otherwise, we're likely going back down into the 330s. Now with the triple Qs down 1.7%, we had the Dow Jones up 0.3%, bouncing off of the support of the breakout at 336. And we had the Russell 2000 IWM ETF up over 1.5%. Breaking through a critical resistance right there above 185 and hitting a next critical resistance zone just below 188. So again, look at the Russell 2000 volume, and that's 2 days of high volume buying, while the triple Qs is dropping 1.7%. Now going back over the triple Qs, I also did a video of why I'm bearish on the triple Qs between 350 and 360. And that's why I have a picture of the bear right here on the chart, and I'm calling this the bear cave. So I think there's a very good chance we're going to continue to see this sector rotation, and you can see the triple Qs volume was very high volume selling today, which tells us we're getting high volume buying in the small caps and high volume selling in the large caps, that we're likely seeing money moving around. Now I say moving around because it's important to understand money is not leaving the market, it is simply moving around, which means overall this is actually going to be a long-term bullish event. And this could be evidence we are indeed going into a bull market. I know a lot of you perma bears don't want to hear that word, but it does look likely that we could be seeing it. And if I jump over to RSP, which is the equal weight S&P 500, it does look like we're getting a bull breakout and testing critical resistance very soon just below 146. If the equal weight S&P starts breaking out and going into a bull trend, that tells us that it's no longer just the large caps, which is essentially only about 10 companies moving the S&P 500. So just pay attention to this theme of sector rotation because I've been talking about it and maybe it didn't make sense to you, but now you're starting to see it in the price action. So just very quickly jumping back to SPY, just watch the gap down here at 423 and the critical resistance at 430 and give enough range for SPY to go sideways while this rotation is going on because the big tech sector is very heavily weighted in the S&P 500. So if we're seeing selling there, it's likely SPY is just going to go sideways. It's possible we build out a bull flag here between 425 and 430. But give it the full range of 420 to 430 with the bull breakout above 430. Jumping over to the triple Qs, essentially we're looking for resistance between 355 and 360 because that's the higher high breakout, but we're getting a lot of selling, which is evident by the wicks at the top of the candle and now the high volume rejection. So on a break below 347, we're likely going to 337 and then the gap fill at 333. So watch that critical support right there at 347. On the Dow Jones, we're just staying bullish above the breakout zone between 333 and 336, and that tells us we're likely going to 341 and then 346. In the Dow Jones, we're not getting crazy high volume, so a lot of that money is going into the small caps. So looking at the IWM, you can see we're at critical resistance outside the upper boundary band. So even if you want to get bullish on IWM, now is not the time to do so because you need to break this level at 188. And we're just getting too far overextended, and that's not something I would chase. So on IWM, even though we are looking bullish, we need to hold this breakout, which is now going to be the break above 185. And then that could be a risk level to take longs once we get a retest of that breakout. Below 185, your risk level is all the way down here at 178. So that's a lot of risk to take, so wait for confirmation that support is holding. On the VIX, we were down 0.14% today. We made another 52-week low today. So this does tell us this is bull market behavior with the VIX this low. So we're not looking for some crazy crash or some crazy bear market to come back. We're simply following the chart and the price action, which is telling us we're likely dealing with sector rotation and we're still in a larger degree uptrend. On Bitcoin, we're down nearly 3%. We are getting rejected from another lower high, which is the retest of the breakdown at 27,000. And I still have this price target down here at 24,000 or the rising 200 daily moving average just above 23,000 while we're trading below the lower high at 28,000. We're not getting bullish until we could break above 28,000. On Tesla stock, we are up 1.47% today, and we did hit the price target at 230, and I'm bullish as long as we're above the breakout at 215, and we are going to move very quickly. So if we break 230, I'm looking for that gap fill right around the 260 zone. Now keep in mind, this requires you to use your risk level down here at 215 or down here right around 207. So buying up here is taking a lot more risk because we are going up very quickly. However, if you've been following me on Tesla, we were getting bullish on the break above 197. So you need to manage your own risk, and the higher you buy, the more risk you're taking. That's just how bull trends work. And we don't have any healthy higher low pullback yet, so I won't be surprised to eventually get a retest of that breakout at 215. So critical support will be 215 and 207. And the critical resistance is right here at 230, which we just hit today. On Apple stock, we were down 0.78% today, continuing the pullback from the brand new all-time high because we're getting overextended, and I still think there's a good chance we're going to close that gap tomorrow just below 176, and that's also going to be critical support. If we break that support at 176, we're likely coming back down towards 171, and then if we break that support, we're likely going through a full correction. And then that means we could fill this gap all the way down here at 158.5 and of course the gap at 167. On the financials, we're at 0.39% today, and we're really just waiting for the financials to get back over the 200 daily moving average to get more bullish. So right now the financials are trying to break out. We just need that confirmation with price action closing above 33.5. The industrials were up 1.6% today, and we did get the bull breakout above 101.5. So now we need to hold this breakout as support, and then we'll likely see a bull trend in the industrials, which is going to favor the Dow Jones. The healthcare sector was down 0.39%, getting rejected from that resistance right around 131, and we did break yesterday's low at 129. So this could just be a dead cat bounce before another lower low. But if we get a higher low and we get another breakout, that will be bullish rotation for healthcare. The energy sector was up 2.65%, and we did get the bull breakout above 80, which tells us we're likely going up here to fill the gap at 83.7 before we fill the gap at 73. So jumping back over the S&P 500, just be prepared for some sector rotation, which is going to mean for a very volatile month of June. And we're likely going to see the majority of the selling in the big tech companies because they have ran the farthest and they have the most to lose as people lock in their profits on those stocks and move that money to other sectors. So don't be scared about any volatility. It should be expected. And if you expect it and it's part of your plan, you should be able to capitalize on it. There's always going to be people out there telling you the market's going to crash. And there's always going to be people out there telling you why you shouldn't be buying stocks. It is up to you to look at the chart and decide where to take on your risk. And remember what I always tell you, only trade what the chart is giving you. Know the trend and know the price action confirmations, and then use those levels as your risk management strategy so that you don't take on too much unnecessary risk. You define your own risk, and you can take on as little or as much risk as you want, and you should have a trade plan that is prepared for any scenario, and then the price action should tell you which one you should be trading. If you want to come trade with other price action traders, you can come join us over at the Stocks Channel Trading Discord community. And I also have my own trade alert service called Bank Trade Alerts that sends you all of your buy and sell alerts directly via email and text message, and only trades ETFs TQQQ and SQQQ. You can still claim 50% off either of these services for your first month by simply looking in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.